Good day, ladies and gentlemen. Welcome to the second episode of Leago Rifumo Trading Podcast. On today's episode, we are joined by Mr. Charles, who is a chairman and the chief operation officer at CTA Research. Mr. Charles, last week we spoke with Kevin, and one of the companies that we slightly spoke about was NVIDIA. So I feel like there is a need for today to touch on NVIDIA, where NVIDIA on the 20th of May, they reported their first quarter earnings. On the first quarter, NVIDIA has a total revenue of $253.49 billion. But anyway, on the earnings, NVIDIA reported $81.61 billion, where the forecast was $78.91 billion, which is a bit of 3.43%. And the earning per share, the forecast was 1.75 USD per share, and the reported was 1.87 USD per share, which is about a 6.52% bid. And what's interesting with NVIDIA, we see NVIDIA that it also has a gross profit of $61.16 billion with a net income of $58.32 billion. When you look at these numbers on the income statement, what's an overall CTA Research overall take on NVIDIA latest earnings report?
It's great to be back on the podcast. Look, when Kevin was on last week, he broke down the massive fundamental valuation of NVIDIA, but from a pure operations lens, this isn't just an earnings beat, this is a masterclass in global supply chain execution and capacity utilization. To put up a quarterly revenue figure of $81.91 billion against a forecast of $78.91 billion means NVIDIA isn't just sitting on high demand, they are actively solving the bottleneck problem and scaling production at an unprecedented rate. For us at CTA Research, the real kicker on the income statement is that gross profit line and operating margin pushes past 65%. In chemical engineering, we talk about maximizing yield and efficiency. Jensen Huang is doing exactly that with his AI factories. They are converting silicon into high-margin cash flows with minimal operational waste.
I agree, Mr. Charles. The gross profit are great. NVIDIA is still leading in AI. But what's interesting with NVIDIA, immediately after earnings, NVIDIA is down approximately 4%. What do you think causes that? And is CTA surprised with this kind of reaction? In your own view, what drives this sell-off just post-earnings?
Sounds completely counterintuitive to the average investor, right? You deliver a massive double bid and the stock drops 4%. Kevin touched on how high the market's expectations were, but let's look at the operational reality behind that. So when a mega cap company is sitting at these valuations, a 3.4% revenue beat is essentially just meeting the whispered institutional expectations. But from an operational standpoint, there's another detail. NVIDIA recently restructured how they segment their revenue, grouping certain gaming and enterprise chips into an integrated edge computing division. So anytime a company shifts its operational reporting metrics, it causes short-term friction while algorithmic models and analysts recalibrate. This isn't a fundamental business failure prayer. It's just the market taking a breather to process the new structural layout.
Thank you, Mr. Charles. And what our listeners can take is that this could be a retracement. NVIDIA can still make new all-time highs. We can call the top or the bottom in a company. What stand out for me in the earnings report, NVIDIA, despite reporting remarkable revenue numbers, look, NVIDIA stated that they had zero revenue from China, which when you look at that, the company also issued a very strong forward guidance, reflecting on the confidence of the management. What does the absence of China revenue mean for NVIDIA long-term growth outlook? And also, do you think the visit of Trump to China could shift the trade dynamics and that could open NVIDIA's market to China, which is one of the biggest market, and NVIDIA can benefit a lot from that. What's your take?
From China is a massive data point, but as Kevin would have likely hinted at, it's a regulatory supply chain bottleneck, not a demand issue. NVIDIA's production lines are so highly optimized right now that they simply reallocated that capacity to Western hyperscalers, your Microsoft, Amazons, and Alphabet, who are collectively spending $750 billion on AI infrastructure. Now, looking ahead with President Trump's recent diplomatic maneuvers with Beijing, even though the administration previously allowed a 25% tariff structure on the lower spec H200 chips, Beijing is pushing back to protect domestic players like Hawaii. But operationally, does it hurt NVIDIA long term? Not really. Their next-gen architecture, Vera Rubin, is rolling out later this year. And our data at CTA Research shows their production capacity is already booked out for the next 12 months. Even without China, their assembly lines are running at 100% capacity.
What's important for our listeners and traders to take from what you just said is that even though NVIDIA reported zero revenue from China, it didn't really affect it so much, but the reopening of that market could improve NVIDIA's revenue massively. This is my final question regarding NVIDIA, and it's very important for me. I will not do any justice if I don't ask this important question, and this is at the benefit of our listeners. If any listener is considering a position in this stock, what is the CTA Research official analyst rating on NVIDIA at this point in time? Is it a buy, a hold, or a sell? And what price target is CTA Research working on currently?
You're asking the golden question, Prayer. Now, as the COO, I leave the daily decimal point valuation models to Kevin and our research team on the dashboard. But from a structural viewpoint, NVIDIA holds an operational monopoly on the hardware layer of this AI revolution. Now, to frame this clearly for our listeners, CTA Research operates strictly as independent data and corporate market intelligence firm. We don't provide public financial advisory services, individual clients' mandates, or retail trading signals. Instead, we focus on institutional-grade data modeling, and we use that research to manage our own in-house proprietary corporate portfolio. We eat our own cooking. If you look back at our internal research report for NVIDIA, our flow analysts flagged a heavy structural conviction when the operational metrics lined up with the Blackwell GPU rollout, establishing an internal target range of $150 to $220. Based on that exact internal data, we accumulated NVIDIA shares directly for our private corporate portfolio. With the market price currently sitting around $215.33, our internal corporate thesis has played out perfectly and hit the top of our operational target. Because our own capital is deployed there, our internal desk stance right now is a disciplined hold. We aren't adding to our corporate exposure at a $5.21 trillion market cap. We are simply holding our position and will reassess our private corporate targets when the next batch of production capacity metrics comes through at the Q2 earnings call in August.
Thank you so much, man. Looking at what you just said there, NVIDIA has already reached the $220 price target that you placed on it, and as you said, you are currently holding and re-evaluating your positioning on NVIDIA. Moving ahead to SpaceX, they have officially filed an IPO, which its first trading day is 12th of June, and this could be the largest IPO recorded in history, surpassing the 29 billion listing in 2019. Look, the implied valuation sits at approximately $1.75 trillion. And I did say that the first trading day is the 12th of June, 2026. Charles, with all the excitement surrounding the listing, should our listeners or any retail investor consider buying SpaceX on IPO day? Also, is this a genuine long-term investment opportunity? Or it's just a case of being caught in hypes, and you know that most especially our listeners who are retail investors or retail traders get caught up in hypes. But anyway, what is the CTA Research view on this landmark IPO?
Prayer. The SpaceX IPO on the Nasdaq for June 12 is going to be historic. But Kevin and I always say we need to look past the hype and look at the actual S1 prospectus disclosures. They are looking to raise $80 billion at a 1.75 trillion valuation. But if you look at the operational mechanics, they actually reported a $4.3 billion net loss for Q1 2026 on $4.69 billion in revenue. Why? Because SpaceX has two completely different operational models under one roof. You have Starlink, which is highly profitable, high margin recurring subscription machine. But that cash is being aggressively burned to fund Starship's development and their massive new AI infrastructure integration. For the Leago Rifumo listeners, buying on IPO day is historically risky due to extreme institutional price volatility. At CTA Research, our operational view is clear. SpaceX has unraveled global moats, but retail investors should wait for the post-IPO price discovery phase to settle before deploying capital into such a heavy capex business.
I agree with you. I think we shouldn't be caught up in IPO hypes. An example that we can use in South Africa, it's an IPO of Boxer, which around November 2024, the share price on IPO was 61 Rand 46 cents per share. 6 months later, around April, we also saw Boxer coming down to trade at around 60 Rand per share, which is slightly below the IPO price. So our listeners shouldn't be caught up in IPO hypes. They should just wait for the price discovery and then evaluate their position if they want to invest or trade SpaceX. Since I've made an example with Boxer, let me take this time and come back home and look at the JSE. And on the JSE, we'll speak about Sasol today. Sasol released their first report of the year on the 23rd of April, and the numbers came in ahead of expectations. We will look at revenue. The forecast for revenue was 121.13 billion rand, and the reported was 122.39 billion rand, which is a 1% beat. On the earnings per share, the forecast was 9 Rand 24 Rand per share, and the report was 9 Rand 27 Rand per share, which is a bit of 0.3%. Something to note is that Sasol income statement reflects a gross profit of negative 30.99 billion. However, the company generated a free cash flow of 823 million. Charles, it's also important to remember that at the beginning of the year, Sasol was trading at approximately about 96 Rand per share, and this year it also peaked at 240 Rand per share, and today, as we are recording this, is trading at 220 Rand per share, which is up approximately 100% for the year. In your view, has Sasol truly turned the corner? Is it a sustainable recovery, or is the market running ahead of its fundamentals? What's CTA Research current read on Sasol, and what's your price target if there's any read on it?
Let's bring it home to the JSE because I know our community is watching this closely. Sasol's marginal beat earnings per share at 9 Rand 27 cents and the revenue at 122.39 billion Rand shows that operational stabilization is finally creeping back into their plants. Kevin looks at the numbers from a valuation multiple perspective, but as an engineer, I look at the structural health of the facility operations. That gross profit sitting at a negative 30.99 billion Rand is a major red flag regarding legacy overheads and structural costs. The saving grace here is the 823 million rand in free cash flow. In capital-intensive plant operations, cash is oxygen. The 100% year-to-date run on the stock is a relief rally, not a sign of fundamental dominance. Sasol has patched the leaks, but they haven't rebuilt the pipeline. We think the market is running slightly ahead of the fundamentals, and we want to see consecutive quarters of positive gross margins before we call it a permanent turnaround.
Charles, I'll be closely monitoring Sasol fundamentals, and I do have a position on Sasol, which I took when Sasol was trading at 96 Rand per share, and currently it's at 220 Rand per share, which is for the year I'm up 100%. However, I am really interested in Sasol. I'll keep it on my watch list, closely looking at any improvement in fundamentals. I will be looking at its cash flow and its gross profit if it's improving. If it does, I might increase my position on Sasol, as I'm a staunch believer of Sasol in the near future. Before we wrap up the show, I know CTA Research offers courses, membership subscription for clients that are willing to have access to your research and reports. For our listeners who would like to follow your work more closely and get in touch, where can they find CTA Research, and what is your website, Charles?
First of all, Priyam, I appreciate you for having me on. For all the listeners who want to skip the noise and learn how to analyze financial statements and operational metrics the right way, the way Kevin and I teach it, come straight to www.ctaresearch.africa. We've built our structured step-by-step masterclasses designed specifically for people looking to build a rock-solid research framework, and our premium membership gives you direct access to the exact data dashboards and equity insights we use every single day.
Thank you so much, Charles. I truly appreciate your time. To anyone listening to this and willing to join CTA Research, please do visit ctaresearch.africa, and I'm also part of the family. Anyway, before I shut it down, please do follow me, Leago Rifumo Capital, on Facebook, on TikTok, and on YouTube to have access to my many thoughts of what I'm thinking about the market. And sometimes I do state any positioning that I have on that. Other than that, thank you so much for joining me on the second episode. See you on episode 3. Have a great day.